Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Monday, July 11th. It is 6:13 in the morning as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures, a little red across the board. Equities down about 0.5%. Oil down 2%. Copper down 2%. Nat gas up 4%. Over on the macro front, not a lot going on Monday and Tuesday, but then Wednesday things really pick up. We've got a CPI inflation print Wednesday morning before the bell. Then we've got the Atlanta Fed out with their inflation expectations. And then Thursday, all the big banks begin reporting, and earnings season will really pick up into high gear. And then on Friday, we've got retail sales and industrial production. Those will be looked at pretty closely. Before we get into the charts, I had a question from a member on basically my trading, how big is my position size, what are my fills, all that kind of stuff. And what I want to do to address that is just kind of give you an outline. I know I've gone through this many times before, but for new members, might be a good review. On my trades, I adhere to the position size of 1% maximum of my trading account. I think that's a good rule of thumb to go by. I think that's, if you think about it, if you're doing an option or a future, those are at least 20 times leveraged. So I like to keep my position sizes small and always be looking at, how much can I lose, not how much can I win. And I think at 1%, that is on the mark. And you'll see that in a lot of different places throughout your reading and stuff like that. So I really like that 1% size. On the micro futures, the small one, the one that's 1/10 the size of the big boy contract, when it comes to micro ES and micro NASDAQ, my comfort range is like between 1 and 3 contracts. When we go to small caps, M2K is your ticker. I find that 3 to 5 is my sweet spot. And what I found is when I go beyond that, the P&L swings are too much. I'm not comfortable with that. So I try to keep those in that range. Maybe when my account gets bigger or I become more comfortable with the instruments, I can increase that, but that's what they are for now. What I try to stick to is between 10 and 15% of my account exposed at any one period of time. So for instance, if it's a 100 grand account, I feel comfortable having 10 to 15,000 out as a position, just in everyday trading. That may go up at certain times, it may go down at certain times, but with 20 times leveraged on option positions, and if you're at 1% of your account, say $1,000 in any one position, you got 10 to 15 positions on at any one time. That's plenty enough for me to handle and keeps me really, really busy. And also, if you get beyond that, you just get, absolutely wild P&L swings. It's good when it goes in your direction, but if it doesn't, it's, equally bad the other way. So that's what I try to stick to. And if I don't have a specific line in the sand, like if I'm shooting against a level and I set my stop loss just below, if I'm down 50% of the premium that I paid, that's a pretty hard stop loss for me. And I find if I ignore that, it usually goes to zero. Once an option has lost 50% of its value, chances are it's not going to recover. So I think that's a good rule of thumb to use on your stop losses. And if I don't put something down on a trade idea, you can just take that 50% rule and incorporate that into your trading. And also on these trade ideas, I do the best I can to get them out to you as fast as I see them. If I say, let's just say that Cigna trade that we wanted to get long on a breakout to highs above 270, and I tell you to set that alarm at 270 and be ready to go, and then I get an alarm here, right? Well, if that was something that you wanted and that you alarmed, and you get that alarm, take the trade. Don't wait for me, because by the time I compose, the idea and say, write you an email that says, hey, Cigna broke out from 270. I just bought the 275s and they were 350. And then you look at the option chain even 15 minutes later, and it's $4 or whatever it is, you may conclude, oh, it's too late, I missed it. Well, that's the best I can do. I think that's the best that anybody can do. So I'm doing my best in that regard. If you miss something, I try to let you know that something triggered. I don't think, it's not like I have 10,000 followers and they're all going to pile in to move the option chain. That's just not the case. So, that's that. If you get a notification that I just took a trade and you don't like it for any reason, don't take it. I'm not offended. Do what's best for you. I'm going to have winners and losers just like anybody else. So, I'm just doing the best I can in that regard. Also, you have to know that just like you, there are trades that I pass on and trades that I take. And just because I send you a trade that I like, that doesn't necessarily mean that I personally own it. I just told you that I have basically a rule of having 10, 12, 15 positions on when things are going good, and maybe a lot fewer if trades are choppy. And so what I will tell you is I don't forward trades unless it's something that I like. I don't send you ideas just to send you ideas. I send you objective trades for your consideration. And if you don't like them, or your trade book is full and you like what you have, just pass on it. That's about the best anybody can do. So keep that in mind, and maybe I hope that provides a little bit of clarity on the trading. So got a lot to go over this morning, so let's get into it. Oil, we broke down, tagged the 200. Now we're on the way back up. I think the critical level is going to come in at the 50 EMA, which is converging with this little trend line here. So we've got a double layer of resistance right at between 108 and 108.50. If you're interested in oil, I would set yourself an alarm at 108.50 on at the 50 EMA, and if price can move up, take out this trend line, take out lateral resistance, and get above the 50, then that's going to clear the way for higher prices. And you can either trade that on MCL on the futures, or you can go to USO, or if you want equities, you can go to XLE or individual names, Chevron, Exxon, Devon, Apache, Oxy. Warren keeps buying there. So, but I think this is going to be a critical level at 108.50 on oil. SPY, we're coming up on, really across the board, we're coming up on some critical levels where if the bulls can take them out, then they really got something going. As it stands now, we've had a nice little bounce off the lows, but as you can see here on SPY, we still are not above the daily downtrend line. So if this, if price comes up and stalls here between 390 and 395 and just starts to roll over, all we'll say is it was another failed rally. So I think it's important now to just be aware of where we are in the charts on SPY. Still below trend. We have managed to recapture the 8 and 20 day exponential moving average, and it's hard to see here, but the 50 comes in at 396.40. And so that would be just a little bit beyond the downtrend line, and then we'll have that big 50-day there as an important technical milestone to get above. When we go down to the 60-minute chart, you can see here pretty clearly that this 392 area is rather important. We've got resistance, resistance, resistance. Haven't really tested it here too hard yet, but getting above 392 would open up this gap to be filled, and then we would be above the downtrend line on the daily, so that would be an important move. One thing that's a little bit different about the daily chart on the Qs is that we have broken the daily downtrend resistance. We've recaptured the 8 and 20 day right here at 290, and you can see the 50 day coming in right here, right about, it's 299.35. I think that's going to be a nice pivot point for us today. 299, right where the 50 day comes in. If we can get above that, then I think we can open the door up to 305 and possibly 310. So this is Qs are in a stronger technical posture, just for the simple fact that we're above the daily downtrend line, whereas on the SPY we're not. We've got we settled into this gap at the close on Friday, so I think above 293, if we can hold that this morning, if we're down 0.5%, we're going to open below. I think the critical support area to hold, if there's a weak open, is 292. If you get below that, then you can roll down to 288, etc. But if we open low and you can get an entry at 292 that holds, then if we come back up through like 295, we can go ahead and fill this gap up towards 298, 298.50. IWM still has a lot of work to do. We have recaptured the 8 and 20 as we have on the other charts. We've got the 50 coming in here at 179. We've got some technical resistance you can see here on this value area that comes in at 178. And we've got this minor downtrend line that comes in roughly, let's just call it 180. And then there's a gap to fill above. But just keep in mind, the daily downtrend line is way up here. And I mean, if we were to, and actually you see that the 200 is right on that line. So if we can clear this minor downtrend line, get above the 50, then I think we would have some good running room to the upside. If we go down on a lower scale, you can see this 176.50 becomes important. That would open the door to 178.25, where you had this prior high. You had support back in here. And then above that, you got some running room into the low 180s, where we have an open gap. Meta. In your charting, when you see price stall at a well-defined level, it just gives you more confidence that that level is important. So we go back in time. Remember, look left for structure. The gap down started here. We came back up to test that level, was rejected. We spent a lot of time right here at 170, was rejected. We came back up to 170, was rejected. We broke through and got to the bottom of the gap, spent several hours there. We opened lower, then we came back up to the gap, and so this 170 line becomes really important as far as support goes, but also you can see that there's been a lot of consolidation here below this gap. That's why I said on, I think it was Friday, I sent out a note. You know, if you haven't been in it at all during this time, your next chance really is a breakout into 172.71 in this $3 gap. And that $3 gap is going to be a nice opportunity. And I think I was mentioning in the trading room that I think if price finally does break through, that gap is going to fill very quickly. Why? Because you've got energy building below it in this consolidation. And finally, if the bulls are able to push through, then I think they go up very quickly. And one thing I want you to notice also is that above 176, you've got a big void in the charts here that could send it all the way up to 184 once it gets through this congestion level, fills the gap, and then up to 184. So I think this is a really important level, this 172.71 for the gap entry. Apple has been showing a lot of relative strength. You can see here more or less a straight line higher. We ran into trouble on Friday, spent most of the day pinned under 147. I think that's your pivot here this morning and going forward. I think you can play that one or two ways. Well, there's always multiple ways, but I'll just lay out a couple of them. If we open weak and we pull back to 145, you can see support, 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 large volume over price bar here. We've got a value range here pretty well established. If you got an entry at 145, I like that. I like the idea of trying a long there with a stop just below, with the expectation that you'll at least get back up to 147 at the top of the range. Another way is if we open slightly lower but then recapture 147, I would buy it there. If this whole thing turns around in the pre-market and we open above 147 but below 148, I would just have 148 alarmed for the entry into this $3 gap, and I think that's the real, that's the real prize. Let's look at the daily chart on Apple. You can see that we're trading above the 50-day, so that's a nice technical accomplishment. And we really I don't have the gap marked in here, but the gap goes to 151, and you can see that the 200 comes in at about 152. And so that 150, getting above 151 and the 200 will be really important in the long run. You can see back in the charts, big support here at 151. We also had a tag at 151, and this back here was the original breakout above 151. So that's going to be an important level when and if we get up there. Tesla has been strong. We got pretty far into this gap. We came back, tested the bottom of the gap. I think the bottom of the gap here at 743 is your pivot for today. We could come back to 735. I think if 735 held, that would be a place to try a long, and 720 as well. If we lost 720, I think it's just going to roll back downhill towards 700. But had a nice little run here, and I still want to lean to the bullish side unless we get evidence to the contrary. Microsoft, this 268 has been a real wall. We came up to it, spent a lot of time right at 268, couldn't get through. On Friday, we had a gap down and it came right back up to 268, but could not get through. And then on Friday, we closed just below at 267.66. So on this one, you really got to get through 268 to open the door to 270. The thing I want you to notice here is this high volume over price bar here with all this traffic along this line. There could be a significant amount of consolidation right below 270 as well. So, if you're nimble, you can certainly try for that $2 on a breakout above 268. But at that point at 270, I just want you to be aware that with this high volume over price bar here and all this resistance overhead, it may have trouble along that line. Amazon. This 112.50 has been an important level. This 115 has been an important level. And 117 has proven to be resistance. We had a high back here where it got rejected and went down. Now we're right back up to the same level. Amazon really needs to take out 117 for a try to go higher. I have put in here the daily 50 EMA that comes in at 118.50. That would be a significant location on your chart technically to recapture that 50 EMA. So I think your pivot today is 115 with an eye towards 117, and then on a breakout there I'd be looking for 118.50 at the 50, and then you've got resistance at 120. Anything above 120 I think opens the door back up towards 125. Google has been really strong. Big impulsive move off of the floor. Got up in here above 2370. Taking out resistance here. All this resistance back here. So now I think the door is open to 2500. And remember, they've got a split on Friday. I forget what the split amount was, but that may be an additional additional tailwind this week of people wanting to get shares before it splits. And if we go look at the daily chart, you can see right here we're well above the 50. We are inching above this 2370, 2375 area. And the thing to notice on the chart is that we're moving into a void on the daily chart, and I think that presents an open door to come up here, flash 2500, flash 2510, where the 200 and overhead resistance lies. That would be a big place to potentially play for a rejection. Why? Because you've got a ton of overhead resistance here, and you've got the 200. So I wouldn't get too greedy at that spot. If you were lucky enough or good enough to make it up there, I would certainly be either rolling out of strikes at lower positions and go to the bank, either roll up to a at the money strike, or just close it and make price prove it, that it can break above all this resistance and the 200. Or if you feel like or see general weakness in the market, you can be short against the 200 and then see if you don't get even just a simple back test of the breakout. So, this would be the breakout and then the back test. You see that all the time. So I think that first touch of the 200 would be a real critical spot where you can, you'd have a lot of options on which way you wanted to try and play it. Netflix really didn't do much. I've got this old gap in here that goes up to 193. I think your pivot this morning is 186. If you drop below that, I think there's a good chance you come back to this high volume over price bar at 182. If it can hold, then there's a chance for 190 and then 193. You can see here on PPO, we've already had a bearish cross, and we're flirting with the midpoint line on RSI. So I think from a technical standpoint, I'd really want to see 186 hold. SMH, here's a 60-minute chart. Remember, we had this fake breakdown. We had gotten short up in here, wrote it down. This was the Micron earnings, which drove it down even further. And then they started buying it up. We got out of our shorts for a manageable loss. And here we are having broken out of the 60-minute downtrend line. So now I think 208 is your pivot area, and looking for a break above 212 to get up towards 217. But I want to show you on the daily chart, putting everything in context, that still below the 20. I mean, that's pretty weak. Still below the midpoint of the channel, and well below the 50, and well below the top of the channel. So a lot of work for SMH to really inspire confidence. And I think at this point, we had the bear trap here, and a couple nice days, but in the whole scope of things, still a bearish chart below the midpoint of a down channel, well below the 50. So this would have to do a lot of work to legitimately say, it's making a turn higher. So just keep in context that any long position that you're taking here is counter trend to the main move that's going on, which is fine. Just realize that it is a counter trend move at this point. And I think most of these are counter trend moves, and that's why I've been hyper vigilant about recommending to you that you go to the bank early and often, because if this is all just oversold bear market rally type action, this little run could end very quickly. And so if you're lucky enough or good enough to get into a nice winning trade, don't just sit there in it. Roll up to even money. Make sure you go to the bank, because when this ends, it may end very, very quickly. ARCF been making its way higher. I think 1750 is your pivot. That opens the door to 1790 at these prior highs. Looking at the daily chart, making a base here, you can see that the 50 comes right in at that 1850 level. And then, if you were just a swing trader on the daily time frame and you got a recapture of the 50 and you broke out of this consolidation range, or base, if you will, then you may really have something cooking. Why? You recaptured the 50, you broke out from the range, and you're moving in to a thinner zone of resistance, and you could come right back up here to resistance right around 23. So that would be a nice swing trade versus more nimble trading inside of the consolidation area. ARCG pushing towards the top of the range. I think 38 is your pivot with support shown. And if we go to the daily chart, you can see here that we've already broken above the downtrend line on the daily, which is significant. We've already broken above the 50. So that is significant. And you can see that if we were to break out legitimately above this 37.5, 38 area where we had a prior low, you can see that we're in a void. And I think this could find 42.5 relatively quickly if the market cooperates. So ARCG is in a much better technical posture than ARC F that we just looked at. ARC K, still making some progress. Tried to break out, it failed. I think 47 is your pivot here for higher or a potential pullback down into 45.50. I think if you did get that pullback to 45.50, that would be a good chance for a long. Why? You had resistance along this line. All that resistance becomes support here at 45.50. So this would be a breakout and a back test of 46.50. And then if that held, you would have a nice long there. If it failed, probably going to come all the way back into the 43s, I would imagine. Let's look at the daily on this as well. We're above the 50, but below the downtrend line on the daily. So that is where your overhead resistance is going to come in. Keep in mind what our technical target is on this double bottom. It's up here at 57.50. Now remember, that's just a target. That doesn't mean it's, carve it into granite like it's going to happen. Got some work to do first. Got to break out above this downtrend line and then take out this prior low at 52.50. Then it can move higher. ARC W daily chart, very much like some of the other charts that we just looked at, forming a nice base here with this trading range from, let's call it 46 to 59. You see where the 50 comes in. If you're not in it, I would just alarm, 59 or the 50. If you get a breakout there, you've got a roughly like $10, $12 measured move target, which would put it up into the low 70s. So I think that's worth an alarm. XBI, this strength in XBI is reflected in that ARC-G, the ARC-G genomics. Got a lot of biotechs and stuff like that in that fund. You can see that we've all but achieved the measured move target. I think things get harder now. Above 85, I think you can see 87.50, but notice that is where the largest high volume overpriced bar comes into play. I think at that point, if you had been long from 80, I rolled up to 85. I'm probably gonna, if there's a quick move in the 87.50, I would consider taking it off or rolling higher, just because this may be a tough line to crack before moving higher. IBB has been doing well. 127.50 looks to be the pivot for today. You can see the top of the range is up at 132, 132.50, 133, and you've got the 200 that comes in a little lower at 131.43. So if you're in IBB, even if you've got a 60-minute chart up that you're working off of, just keep in mind where your daily lines of resistance are and where the 200 comes in. But I will say, a move above 133, you're moving into a big void here, which would be exciting, because then that would open the door to 145. XLV, we rolled higher on Friday on this reach up candle to 132. Then, of course, it came back. So we were able to go to the bank at 132. Now, of course, those particular options are now red. I think if you drop below the 200 that comes in at 129.34, I would just get out of those. The 200 should act as good support. And then BABA didn't do what I thought it was going to do on Friday. I thought it had gotten above 125 for this breakout. Then it came back. So we're currently in a losing position here on BABA. If it breaks back below 120, I would just get out of it and then reload. But China in general has been doing well. So let's see how it goes today. If you're new to the channel and you appreciate technical analysis, thank you for spending time with me this morning. Hit the subscribe button, the alarm bell, a lot more coming your way. And if you jump over to the show notes, you'll see a link to the blog site where you can add your email address and get all my content morning, noon, or night. So let's wrap it up there. Got a really big week with inflation coming and the Atlanta Fed and the banks reporting. It's going to be really important in this earnings period to be hyper aware of revised guidance lower or missed earnings. That's the biggest thing in front of this market right now, is what do earnings look like. So let's wrap it up there. Hope you guys have a nice trading day. This has been Chris Buss with Traders Profit Compass. Talk to you next time.